Gold did well, but then gold corrected with the bear market. Well, we've had a multi-year consolidation, and gold now is it's rallying. It's pushing to new all-time highs because I think a lot of people, investors, see economic weakness. They see they're worried about currencies. They're worried about all kinds of different things, and people are moving into this space. I think it's just starting. I think gold, silver, and miners have some pretty good room to run still over the next couple of months. And I think it's one of these warning signs that we are slowly getting closer to the end of this kind of economic cycle, and we're going to see a bit of a reset.
In recent market analyses, experts note a potential surge in precious metals, particularly gold, silver, and mining companies, over the coming months. ChrisVermeulen, chief market strategist of thetechnicaltraders.com, suggests that this uptrend could be a warning sign of the economic cycle nearing its end and a forthcoming reset. Gold recently reached a record high above $2,220 an ounce in response to hints from the Federal Reserve about potential rate cuts amid persistent inflation. While the spike was notable, gold ended the week unchanged, with expectations of increased volatility ahead. Despite this, the overall trend remains bullish, although further gains are deemed limited due to the market fully pricing in Fed easing. Attention is turning to silver, with analysts anticipating it as the next metal to rally. Due to its higher volatility, silver has historically outperformed gold in both bear and bull markets. However, it has also faced harsher punishment during downturns, leading investors to approach it cautiously during rallies. Vermeulen points out that while gold is already in a bull market phase, silver and mining companies are showing signs of awakening, though they have yet to break out fully. In a recent interview with Kitco News, Carly Garner of DeCarly Trading echoed sentiments about silver's potential despite its volatility. She believes prices could exceed $30 per ounce as momentum builds, noting that silver often trails gold's movements with a delay, indicating the potential for catching up shortly. Vermeulen suggests that investors are flocking to precious metals amid concerns about economic weakness, currency instability, and other factors. Gold is seen as a more robust and stable investment than silver and mining companies, and it is perceived as a more speculative option within the precious metals sector. Come along as we explore the valuable insights provided by ChrisVermeulen. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Typically, when we get really close to the end of a major stock market and more so economic cycle, we see energy stocks. We usually see crude oil, energy come to life, which energy stocks have been on fire over the last couple of months. We tend to see gold, silver, and miners come to life, and gold has already come to life. It's a little more stable, but we're seeing miners and silver. Big money flows are starting to rotate into them. They're moving up. So I would put the precious metals in a bit different space, and really, I would say well, gold is more so in a bullish space. Miners and silver are still struggling. But if we were to look at the monthly chart and go back, so back over here, we had a multi-year consolidation. And then we saw gold, silver, and miners rally up really well. They were in a bull market phase, which gold is in a bull market right now, until the stock market topped. And so as the stock market was starting to stall out, sectors were failing, very similar to what we're having now. Gold did well, but then gold corrected with the bear market. Well, we've had a multi-year consolidation, and gold now it's rallying. It's pushing to new all-time highs because I think a lot of people, investors, see economic weakness. They see they're worried about currencies. They're worried about all kinds of different things, and people are moving into this space. I think it's just starting. I think gold, silver, and miners have some pretty good room to run still over the next couple of months. And I think it's one of these warning signs that we are slowly getting closer to the end of this kind of economic cycle, and we're going to see a bit of a reset.
So you don't think gold is overbought compared to silver and the miners?
I mean, to me, gold is actually a much stronger play. It's in a uptrend. It's breaking to new all-time highs with no overhead supply. It's seen more as an investment. People who buy it are everywhere around the world, and they buy it and they usually keep it. Silver and miners are more speculative, so they get pumped and dumped and dropped, and people get shaken out because they move percentage-wise a lot. But to me, gold is more solid, and it holds its ground better. And it's in a bull market, whereas the precious metal miners and silver are struggling. They're just starting to come to life. They haven't really broken out yet. Trying to time a market, as everyone knows, is pretty difficult. It's a pretty high gamble. Technical analysis, which means I follow price, I follow cycles, sentiment, money flows, all kinds of different things, technical analysis gives me the insight to see what kind of power and strength is behind certain moves. And everything in the stock market, well, in the financial industry, is linked in some way. It's called intermarket analysis. So if one asset class is going down, it could be gold, could be stocks, could be whatever. That money that's coming out of that asset is going to be flowing into another asset. So depending where money is flowing between all of these assets, we can get an idea as majority of money coming out of, say, the stock market and flowing into a bunch of defensive sectors or commodities like gold, things like that. And so the nice thing about technical analysis is we follow trends. We can identify when something's going up, down, or sideways. And if we want to take advantage of that asset, we jump on and we follow that trend. Now, we might be long the markets, which we've been long since November, and we're deep in the money. And I feel like we're getting real close to a top, but we're not going to get out of a trade just because we think the market's going to top out. And the technicals are slowly starting to weaken, telling us, hey, we're getting closer, but we never jump ship until the ship actually turns a corner. Once it's turned, then we get off and go, okay, it is actually going down. Let's get off. So, we don't ever try to pick a top or a bottom. That becomes a very painful game, especially if the market keeps going up. Like right now, a lot of people try and pick a top, they get out, they think it's done, and it just keeps going higher, and then they get left behind. So we're more of a trend following strategy and have a very good way to identify when that trend is breaking down through a lot of different layers of analysis.
ChrisVermeulen is anticipating one last surge in Nvidia's stock price, potentially leading to new highs. This anticipated push is driven by market sentiment and seasonal trends, marking a continuation of the upward trajectory seen in the AI sector. The significant gains in Nvidia's stock price highlight a broader trend in artificial intelligence, where investors actively seek out stocks that can replicate Nvidia's remarkable returns. With its dominance in providing processors for AI workloads, Nvidia remains a standout player in this market. Nvidia's co-founder and chief executive recently delivered a keynote address at the company's GTC conference, shedding light on the latest developments and initiatives. This event underscores Nvidia's ongoing innovation and leadership in the AI chip-making. Nvidia's stock has already experienced substantial growth this year, surging by 81%. Vermeulen's analysis includes identifying upside targets for Nvidia using Fibonacci extension analysis, suggesting the potential for further gains of around 20%. Additionally, they speculate on market behavior, envisioning a scenario where euphoric hype drives a final surge in the stock market before a possible downturn. Let's get back to the interview.
If we take a look at the daily chart of Nvidia and we look at this big rally that really took place from mid 2022, I like to use Fibonacci extension. I find this is one of the most powerful tools for identifying how much momentum, how much upside potential is in a trade. And so if we were to take this low and go up to this high that we saw in 2023 and come down to this low and carry it forward, it gives us an idea of where this market should run to. And you and I think, talked about this a while back. Long story short is if the market rallies up to this orange line, the 618, and it has a little bit of a pause, we almost always see it rally up to the 100% measured move. And how that works really is just based on the strength that it took in this first run. If this continues this chart pattern, it should have the same strength to run that same amount to the upside. And this is a very large chart pattern. The fact that we hit that, once we go beyond it, we're kind of in short term kind of bubble phase. Now, Nvidia's got a really good story. I mean, they're kind of leading in the AI space. They have a new chip. I mean, the AI space, it has moved a lot in the last year. It's in everything. In fact, I think you might have saw a flash of this image here a minute ago on my screen. Like, AI is now in toothbrushes. Where is it going to end? But all this stuff, all this AI stuff, most of it now to me is really just garbage.
That must be a marketing gimmick. I mean, what?
Oh,
AI and toothbrushes. Yeah. What is it going to do? Figure out your brush pattern and then adjust its sensitivity? Like, what is it?
And this is what I mean. Like, AI is now getting squished into everything as a marketing tool. We're really just scratching the surface.
I'm going to look that up. Oral-B with AI. I'm going to look that up later.
Yeah,
anyway.
Exactly. But AI has got so much room to go in the film industry and every industry. Like, we're really just tip of the iceberg. So there's a lot of, fundamentally Nvidia or even anything in the AI space, fundamentally this market is just starting. I mean, it's going to be absolutely massive. So there could be one sector that bucks, say, a much larger market correction, and that's probably going to be the AI space, because it's really like infinite at this point in my mind of how far AI can actually go. But you wanted to know what would I need right now to take advantage of this trade. So we could look at a couple different things here on this chart. Say, for example, like right now, it's starting to look pretty strong. It is coming up. You could argue this is a bit of a double top. But if we take a look at this last run that really broke down from this low pre-earnings, we had a run up, and I'm using Fibonacci extension here. I'm going to mark the high and then mark this low. This is going to tell us where the next upside targets are for Nvidia. And that is the 100 or the 1025 mark, and then the 1130 39 mark. So there's another fairly easy, potentially 20% upside in Nvidia. And I've been kind of picturing this in my head for a while, that we're going to see this one final push kind of going into May, or near May, just because seasonality wise, it's when we usually see the market start to stall out. And people are really going to pile in, like hearing Nvidia break to new highs. And this push, for some reason, I feel like people are super hypersensitive to it, and they're going to pile in. And we're going to see the stock market and potentially the Russell 2000 really kind of pop and squeeze higher and really get a lot of people involved. And then this summer, people are going to be shaking their heads when things start to potentially plummet. And they'll be like, I can't believe I just bought into this euphoric hype where I thought I was going to nail it.
The gold price continued struggling to break through the $2,200 mark on Thursday and oscillated in a narrow trading band through the early part of the European session. What key factors do you believe will continue to drive investor sentiment and shape the trajectories of gold, silver, and mining companies? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.